Sanbonani Dumelang, good evening and welcome to episode 350 of the Private Property Podcast. I'm your host, Khumalo. If you're joining us for the first time, you have been missing out on incredible content on all things relating to property. We're on your screens every single weekday at 7 p.m. where I'm always in conversation with a property expert who helps us better navigate our property journey. We're counting down to episode 400. I think that's going to be in December. So we're quite excited behind the scenes to put together a huge show for you. I think 400 is actually such a huge milestone, especially for the tail end of the year. So that's definitely something that you must watch out for at home. And to all our regular viewers, welcome back. You know how we do it. Every single weekday, you and I have an appointment. Whether you're watching us on Facebook, on YouTube, or on Instagram, I would certainly want to hear from you. You can drop those green hearts down here below and sign the register this evening. And as usual, you know that we're running an incredible competition right here on the show where you stand a chance of walking away with 500 rands in cash. And all you have to do is, of course, comment on that post that we have on our Facebook page, and you stand a chance of walking away with 500 rands in cash. The only catch, you need to be watching us live. So when we call your name, you drop us a text in order to claim your prize. We currently have 500 rands in the money bag. Yesterday's winner did claim their prize. I think it was Bonzo claimed that 1,000 rands that was in the money bag. So this evening, we're going to be giving away 500 rands. And of course, I do hope that you're going to be watching and will be able to claim that money. It is a Tuesday, so you can look forward to Umbali Noko bringing you the farming podcast later on this evening. And she's on your screens every Tuesdays and Thursdays with the Farming Podcast, tackling all things agriculture. I know that they're kickstarting a really great Gardening 101 series. So that's what you can look forward to. If you're like myself, you've got green fingers and you're already growing something, in your garden and want some tips and tricks on better handling all things relating to your garden, then that is a show that you do not want to miss out on. And every Mondays and Fridays, Chad brings you the Home Shoppers Show, where he takes us through incredible tours of exquisite properties that you can find on www.privateproperty.co.za. And on Wednesdays, Esther Klassen brings you the First Time Home Buyers Show, where she's always in conversation with people who not only walked that first time home buying journey, but have gone on to grow their property portfolios from strength to strength. Those are the great shows that you can look forward to every single weekday at 8 p.m. Make sure that you follow us across our social media platforms on Facebook, on Twitter, on Instagram, on LinkedIn. We're also, of course, on TikTok. You can follow myself at Zamantungwa_K on Instagram as well as on Twitter. Now, this evening, we're talking about something that we don't usually talk about on the show, because we always look at different parts of what we're going to be exploring, but we rarely ever actually explore the big picture. And that is, of course, we're looking at ways to improve the property sector's value chain. And I think more often than not in the show, we deal with different parts of the value chain and helping you at home to even understand how you fit in as a consumer and some of the things you need to know and how you can better manage how you handle your property journey depending on which player you're dealing with in the value chain. But we want to look at ways that we can improve the property value chain. I think far too often we hear about instances where there's certain issues and challenges in a sector, and of course some of those issues and challenges are not broadly in the sector, but there's sometimes at certain parts of the value chain. So I really want to get a better understanding of ways we can improve it. But before we even start there, we're going to explore what do we even mean by value chain, how does the property sector value chain look like, and also what does inclusion and equality look like in property sector value chain. And to help us get a good sense of how we can go about doing this and really understanding even how we as consumers fit in to the value chain, I'm joined this evening by Tessa Dooms, who is a director at Jasoro Consulting. Tessa, good evening, and thank you so much for joining us.
Good evening, Zama. Good evening, everybody. Thank you for having me.
I think, just a really great starting point when we look at a topic like this, before we even look at, the granular details, is when we talk about the property sector value chain, what exactly are we referring to?
Yeah, so we're talking about a wide range of players in the sector that enable people to either be buyers, sellers, renters, builders in the space. People who are deriving value from property are supported by a wide range of both institutional and, in some cases, a fringe to the sector players who are trying to create enabling environments. Of course, enabling environments because they derive some value from the kind of support that they provide, but also because we recognize that the sector and a sector like property is much like the retail sector in the country, where it's a staple. It's a staple. We forget that property is not a luxury. That one of the basic human rights, for instance, is the right to shelter. And much of the way in which we construct our societies is around the need for property. So it's one of those things that's never going away in terms of its need, and is something that is a fundamental part both of our economic growth as a collective in the country, on the continent, but also about the individual ways in which we live our lives economically, socially, and otherwise.
And, Tessa, I think one of the key things with our conversation this evening, before we can even look at ways to improve the property sector's value chain, let's perhaps look at the factors that come into play that lead to a successful value chain, because I think it's one thing to want to look at areas of improvement, key factors that certainly determine the success of the property value chain.
Yeah, I think one of the things that the sector relies on is big, stable institutions, and maybe in some ways is too reliant on them. But if we think about, for instance, the financing sector, banks and institutions that have large quantities of money and are able to engage in ways that secure lending for people is really a big fundamental part of it. So you need some level of security. The second part of it is actually safety. And I think we forget often that both in terms of our financial safety, but even our physical safety, is a requirement for this sector and this value chain to work, is we need to have checks and balances all the way through a property journey to ensure that there is safety in many parts of the process. And I think finally, there's an element of relationships and trust. A lot of this sector's value chain is dependent on trusting people and building relationships with people. If you think about just the buying and selling of property, if you think about the building of property, we have many horror stories of people who have terrible experiences because of bad actors in the space, selling things that they can't, hiding things when they do sell or buy, or constructing things in ways that are unethical and harmful. And so I think those are some of the more generic markers. And then, and maybe I'll add to that, just issues around knowledge and information. And one of the things about the sector that we do have to have a conversation about is who are the people who broker knowledge in the space, because many people come to the property space as consumers as a once or twice in a lifetime engagement. They don't come in as something that an industry that they're going to engage with multiple times. So they don't have the learning arc that you might have with other industries that you engage with. And so in the short spurts that you are engaged with the industry, you need a lot of knowledge in order to make good decisions. And often there are brokers of that information and that knowledge. There are people who, for whom it is in their best interest for particularly consumers to not have as much knowledge as possible. And so knowledge is, I think, a key driver of success for the value chain, particularly for the customer experience.
And, Tessa, I actually love that you mentioned that last bit around the key role that knowledge, particularly for the consumer, plays, and that there are, unfortunately, certain stakeholders within the value chain who would much rather consumers at home don't know about, because then it's easier for them to make the sale and certainly be able to extract whatever funds they were able or wanted to extract from people at home. And I think the other two things, of course, trust and relationship is something that always gets echoed throughout the show, that property is not a solo thing. And often people who started off even from an investment perspective, who started off doing it by themselves, realize that there's a ceiling that you reach when you started off by yourself. And when you really want to grow and scale, you have to at some point go at it with people. There's so many different people that you need to form relationships with as much as possible. And I think, speaking of that relationship, of course, the viewers at home are very used to the family that we've created here, where they're able to get their daily dose of property knowledge and able, of course, to also certainly ask us various questions that can better enable them to make better property decisions. And I already see some of the love that we're seeing on our Facebook page from you at home: Andre Pitot, Olivan Govender, Paulina Ngosi, Justin Bartman, Eyetu Maekiso are watching, and Menzi Butelezi saying that bond protection is a big value add in property value chain. And that is quite a big one. I think some people actually was in a meeting just today who don't know about bond cover and bond protection. And sometimes, and I think if anything, that's a sale opportunity for somebody that they can explain it quite well, and it certainly has its benefits. And I think I want to find out from people at home, if where in their property journey did you have issues with? What did you struggle with along in your property journey? Especially because that there are all these different steps. Even when you're a tenant, there are different steps before you even move into a place and by the time you move out. And if you're looking to buy, there are various steps. If you're looking to sell, what have been some of the pressure points along your property journey? And perhaps who were some of the culprits that were the reason why you experienced that pressure point? I know that for many of us who are homeowners might say perhaps contractors are a big pressure point. There's always some or other thing that needs to be done, and I feel like everybody has a contractor horror story. So do share with us down here below some of your experience with what have been the pressure points throughout your property journey. And Tessa, speaking of the pressure points, what would you then say have been some of the challenges when it comes to the property sector's value chain that we're still currently facing? Because I think I feel like challenges are just a moving part. What would you say are some of the key challenges that the sector faces?
Yeah, I would say for me, one of the biggest challenges is financing. And for two reasons. One is that there seems to be a limited market for financing. And two, it's a very opaque process. You don't really understand, for instance, what the vetting process actually looks like and how you present yourself to a financier, what works in your favor and what doesn't. People kind of blindly just produce documentation, loads of documentation, and then hope for the best. But there's not really a clear explanation about, for instance, if you're unsuccessful, what are the things that made you unsuccessful and what are the things that could make you successful? I remember in my own just most recent property experience when I was selling a home and looking to buy a new one. A year before I actually made the decision, I thought, let me be a proactive consumer, let me call the bank, let me find out what my status is. And no one was able to help me even just think through conceptually what would make me a good prospective client of the bank or what wouldn't. There was just an inability for the banking system to have people on hand to explain those kinds of things unless and until I was ready to present paperwork and I was ready to get into the process. But you also don't want to get into the process not knowing what your status is. You don't want to get into the process and then be unsuccessful. But besides just the narrowness of the market and the opaqueness, I think that there is a growing need for more people in the space and more players in the space. So we've seen, for instance, a proliferation of what I call mortgage enablers. And this is for both buying and building. But a lot of the mortgage enablers are really not providing as much value into the finance sector. They're more giving us just, here are the comparisons so that you don't have to do the comparative work yourself. And while that's a nice to have, again, it doesn't give you as much information. If we think about some platforms that are now becoming home loan specialists. So you think there are some financial institutions that are becoming home loan specialists, particularly because they're trying to address this thing about it being such an opaque space and trying to provide more information. But where the real innovation lies, I think, is in financiers that are looking to help people invest, that are not just looking to give people money and then don't care what you do with that money afterwards as long as you pay your bond, but are actually thinking about how do we ensure that the person that we're giving money to is able to use this as a live investment. So there are players that are coming up in, for instance, in township and rural areas that are helping with the building of back rooms, the building of low-cost accommodation, micro-developments. And therein lies so many opportunities to help people invest with that money rather than just have a relationship that says, if we give you money, we hope that you give us back. And what happens with your journey is irrelevant to us. Then, of course, you spoke about contractors, and we can talk about the property developer as part of that contract chain. And I mean, recently we've seen the Blythe debacle that's come up, where developers are not just people building buildings. Developers are thinking through a very long lead into that value chain and how they might be able to profit off that value chain for a long time in. So your developer is not just the passive person who builds a building and walks away. They are actually part of, especially if you're buying, for instance, in an estate, or if it's commercial property, that developer is actually part of that journey for the long haul. And you need to understand what your relationship is with the developer you don't actually get to see. The people who actually construct and the whole construction industry, there are so many issues around that industry, around accountability, around price, around regulation. And again, there are ways in which that can go very wrong, but also ways in which that is a gate-kept sector when it comes to particularly bigger developments. And then the final thing that I wanted to highlight is maintenance. The maintenance industry in the property sector is really important. Those contractors that you're going to have to deal with regularly. And I would say in the sector, they're probably the people who get the least attention because we, as people who invest in property or own property, we hope we never have to see them. But that's a pipe dream. And so as a country, I think we're missing out an opportunity in investing in that sector and making sure that people who are operating in that sector, particularly people who are operating in the lower end of the market, are able to get the right kind of qualifications, get the right kind of vetting. These are people who we are paying money, letting into our homes, and they're doing things that we really can't attest for. When the electrician comes in and he says to you, "Oh, Sissy, it's going to cost you 10,000 Rand because there's these 3 things in those 5 places," you can't even interpret what he's saying. It's not like you can say yes or no. And it's going to cost you more money to get a second opinion. So there's an opportunity in that sector, again, to regularize it, but also to make it a lot easier to navigate. So those are some of the things that I think are outside of the traditional thought about the agent, the buyer, the seller, the landlord, the tenant.
And I think we're going to explore more of that. I want us to take a quick break, and when we come back, we'll be seeing more of your questions and comments. We want to go to a quick break, see who the potential lucky winner of that 500 Rands that is in the watching so that they're able to claim that cash before the show ends. Let's see who this evening's lucky winner is. Evening's lucky winner of that 500 rands in cash that is in the money bag. If you are indeed watching us, make sure that you drop us a message down here below in order to claim your prize. So Innocent Apiwe, that cash is up for grabs and it's all yours. We want to see if you are indeed watching us this evening. And talking about people watching us this evening, I see we've got a new member in the family, Utabiso Mufukeng on Facebook saying, hello everyone, it's my first time here. Let's give Utabiso a great private property family welcome. I know that many people absolutely love embracing new members of the family, Tabi. So we do hope that you're going to enjoy your stay with us. We're here every single evening at 7 p.m. tackling various property issues. Then I think one of the big things, of course, this evening that we are tackling is the ways to improve the property sector value chain and really getting a good sense of some of the different players, some of the bottlenecks within the value chain, and then how do we go about slowly improving them. And I'm joined by Tessa Dooms, who's a director at Jasoro Consulting. And I think before the break, Tessa, we covered so well the various players and the opportunities to not just better them, but also better the end product that we as consumers get. Because I think we all already know that fundamentally, almost every stage, regardless of which sector you're in, there is a service that's being provided, but we're almost sometimes not looking at property from a holistic perspective and being able to walk that journey with a consumer and saying, how can we make different steps of your property journey as best as possible, or certainly as easy and pain-free as possible. When we then sort of change gears a bit, so getting a good sense of what the challenges are, how can we then go about making those improvements and making sure that things are slightly more efficient within the value chain holistically?
Yeah, I'm going to mention two, and I'm going to start with one that is a bit more top of mind for everyone. And that's the question of relationships within the sector. A lot of times what gives us comfort as consumers in the sector is referrals. The idea that the first person who we have contact with, for instance, the bank, is the one that helps us and refers us to a next player in the step, or the estate agent becomes the next person who refers us to somebody else, and that gives us comfort. And I'd like to call that cold comfort. It's cold comfort because your experience is very limited. And a lot of what's happening in the sector is that relationships are based on proximity, they're based on status, they're based on a lot of things that may not be quality. And so we do need a lot more of kind of objective arbiters and ways that the consumer can become part of the vetting process for who they're dealing with and who they're engaging with. So when you're thinking about who your attorneys are going to be, right now, most people get given attorneys, get stuck with attorneys without having any of choice, any way of vetting that, because there's a relationship between the real estate company and that particular firm. That relationship may make it easier for those players to interact with each other, but it may not necessarily provide the best customer experience. And we've taken away a lot of the agency from the customer to be able to choose. And so we need platforms, we need to use tech better, we need government regulation that opens up the ability for the consumer to have much better understanding of what quality looks like in the space, what is a good versus a bad interlocutor to be dealing with, and then to be able to do comparisons that the customer themselves can engage with. And then the second one is, I think, a little bit more tricky to deal with. But it's really a question about how the space opens up and becomes more inclusive. and how it becomes less about a big money industry. Because right now in South Africa, particularly, property is a big money game. And so there are a lot of people who are engaging informally in the property sector in this country, because at a certain threshold, that's when the institutions start looking at you as legitimate. And that needs to be changed, that needs to be altered. And it will be altered in two ways. It will be altered by big institutions being more innovative about seeing customers that have incomes below a particular threshold, that have precarious incomes, that don't fit the model secure client, and finding ways to bring those clients in, but also getting more people who are contractors, who are offering services in the space, who come in at the lower range, in the lower income brackets, so that you can have micro developers as opposed to the big developers in the space. You can have microfinancing that is secure and reliable and works for you. You can have rental agreements and rental spaces that is lower income, but is as professional, as secure for the consumer as the higher income is. And I mean, one of the examples that I recently came across, just in terms of this inclusivity idea, was if somebody is going to be a renter, the idea of how much it requires from that person in order to prove that they are legitimate and they will be able to pay. Number one is varied. So from one agent to another, there are different things that you're going to need to present, but it's also very subjective. And so as a consumer, there's so little control that you have in that space, and proving your income and proving things in ways that may be completely subjective and based on things that have nothing to do actually with the transaction. Things like race, things like gender, things like class are playing a role in the sector still, because there's so much subjectivity around who's included and who's excluded. And those are the kind of things that we can, I think, take into other parts of the sector as well. But I think there needs to be a more inclusive, look at the sector. How do we bring people in so that we open up who can participate in the market, but we also open up in terms of regulation so that people are not discriminated against unfairly.
Mm-hmm. Tessa, you were mentioning how currently, as it is, property is a big money, sector. And I'm keen to hear from you what kind of changes we can put in place in the value chain that can, on the one hand, increase revenue, because the reality is, businesses are there to make money and make a profit. You say, I think it's one of those things where sometimes the barrier of entry can be very high. We know that there are different players who sort of play at different, relatively smaller levels. So how can we almost go about, increasing revenue, but lower the cost, particularly to the consumer?
Yeah, I used the phrase the other day about mainstreaming the marginal. Our country gets very fixated on the parts of our industries and our sectors that are most formalized. And our idea of growing and developing a sector is that we must get everybody up to a certain level. And that level is still determined a lot by a certain income level and a certain cost. And for me, it's about flipping it over. It's about making the things that are happening at lower thresholds of income, that are happening in areas that are not seen right now as suitable, the most suitable for property, the priority, and really seeing how we start to work in those areas, work with those income groups. And I often think about banks, and I've had conversations with home loan departments of banks saying to them, you're missing out on a lot of people who could be bringing a lot of money into your bank because you're not being creative and innovative about inclusivity. You're not thinking about how you're housing the nation. You're thinking about a very old model of how you actually get people in. And there are models around the world that are becoming more inclusive and are not as onerous. I think one of the things that I've been hopping on and I've seen in other African countries is making the time period that people pay for their either home loans for buying or for building shorter. Rethinking the ways in which interest is calculated and how all of that evolves. rethinking even the kind of the costs, the unseen costs, and how those are regulated. Again, right now, it's sight unseen for the consumer. So I think there are certainly ways that we can look at models around the world, low-cost income models in various European and countries and in America have a lot of promise and opportunity for us to think differently about who gets included in the space. And I think that would go a long way. But I think, again, going back to the earlier issue around knowledge, for me, one of the lowest hanging fruits in this space is the space that you guys are trying to fill, which is this knowledge gap. And I've been working with a small financier and trying to just map out one business that's in the sector and make it a simpler process for somebody to engage. And so that they have sight of the entire value chain just in one business. It can be very complicated. And so we do need knowledge brokers in the space that are almost agnostic to the business. Somebody needs to be kind of the consultant of the property industry. Somebody who's here to teach, to provide information, that doesn't have a horse in your property race, right? So they don't have, if you buy X, then I get Y. There needs to be somebody who's more neutral than that so that you don't feel like you're getting pushed in different directions. But the knowledge gaps are way too big across the sector. And as people pass through and go through different interlocutors, they almost need mentorship. They almost need somebody whose sole interest is to provide you with the best possible experience and take you through the chain. And I think there are platforms that are really primed for it, and it could work really well to shift in that direction. But we definitely need a knowledge shift in the sector so that people can have sight of the full process and can take their agency back in making informed choices rather than forced choices based on circumstance and finances.
Before we close off there, Tessa, I think what would you say is the benefit to property investors, particularly, and even property managers, for them to have a really fundamental understanding of the importance firstly of understanding the value chain, where they are in the value chain, and of course how the property value chain effectively works. Because I think more often than not, certain parts of the value chain sort of work in silos. Some know we're going to work together, but they kind of like bundle themselves up, right? Rarely do you actually find, for example, property investors who have fundamental sight of the value chain holistically, and then why it's important for them to know it and understand the workings. What would you say are the key reasons why those players, the investors and the property managers, why they should have a fundamental understanding of the value chain and its key workings?
Yeah, I would say everybody who works in the space must understand the value chain end to end, and must be able to communicate that to people who are coming to engage the property sector. Like I said, these kind of once or twice in a lifetime type of consumers. And that might seem counterintuitive in that it's a lot more work than you need. If you're just the agent, I just need to understand what I need to do, what I need to deliver to this client and the next person after me and then the one before me, and then I'm done. But then you've put somebody into a property that was badly constructed, or you put somebody into a property where that's being poorly managed. The end result of that is less people engage the space regularly. Less people also grow their portfolios in the space because it just feels too cumbersome as a consumer if you feel like you're going to be ripped off, if you feel like you're not being given information. And so the better the customer experience is all the way through the value chain, the more everybody wins. Even when we think about kind of, opening up an inclusion in the lower income markets, I always find it weird that people seem to think, that's a risk and we don't want to take that risk. Surely all businesses operate on the basis that you want more clients rather than less clients. And so doing the work that opens a bottleneck somewhere else that brings in lower income clients has a benefit again for everybody in the chain. And it may require adjustment, it may require innovation, but when has an industry ever failed because it innovated? And I want to challenge the property sector in South Africa, particularly to ask themselves, when last have we fundamentally innovated or brought innovation into the sector? And why is there kind of a hesitance around that innovation? Where does that reluctance come from? Because ultimately you want more customers, you want more consumers, and there are too many people who are gun shy about the property sector. Too many people who are renting when they could buy. People were just like, I will stay in the renter thing for the rest of my life.
Who buy at the wrong amount, and some who end up buying a second or third property, overpaying, and I think some who go into property investing, not knowing what they're doing, end up losing quite a lot of money, where they had the appetite for it, but as you say, the knowledge wasn't quite there, and there wasn't a clear enough path, certainly to help them along the way. So they had the temperament, they had the energy, and I think we sometimes don't think about the knock-on effect of, especially the smaller landlords, right? The knock-on effect of when the smaller landlords are actually able to run, and we'll call them the businesses because we know that you must run that property like a business, the positive knock-on effect when they get it right, because the reality is you're paying your bond on time, you're paying rates and taxes on time, you're paying levies on time. Those levies are paying for other services. You're getting a contractor in that you're paying on time. So there really is, positive ripple effect when even the property investors get it right. It isn't just the landlord gets a lot of money in their bank. So I think understanding then the value that a successful small scale property entrepreneur, how they also sort of bring about bigger value. Tessa, before I let you go, I think any final insight when it comes to the ways that we can improve the property sector value chain before we close off?
Yeah, you said a word that I'm really, really excited about, which is property entrepreneurship. And I think in a country where we need entrepreneurship in order to get us to the next phase of our growth and development, property entrepreneurship needs to become a viable option for people. And working in the sector is one thing, but being an entrepreneur in the sector is a completely different thing. Yeah. I mean, just the idea of being a landlord, people don't talk about it as entrepreneurship, and so they don't treat it like entrepreneurship. They, this kind of, I'm going to be a landlord, but I'm going to hire company X to do this on my behalf because, I'm not inclined that way. I think we need to just break that. We need to break the idea that this is not a space for entrepreneurship, not, of course, only in the buying and selling and renting space, but again, across the value chain, in the maintenance space. There's some property entrepreneurship that needs to happen in that space. In the construction space, property entrepreneurship must be encouraged. The way in which, for instance, government tenders and big contractors are given out needs to be about looking at who's the entrepreneurs and people coming up in the space, and not only, the big guys that we've known all the time. In the financing sector, there are property entrepreneurs in that sector. I want to see more property entrepreneurship because I think it will, again, benefit the entire value chain, and ultimately the customer gets a better experience. The more choice they have and the more people they have that are motivated in the space to actually compete for giving the customer a good experience.
Tess, I think that's a great place to leave it at this evening. Thank you so much for joining us on the show.
Thank you for having me.
And that is Tessa Dooms, who's a director at Jasoro Consulting, wrapping up the Tuesday edition of the Private Property Podcast with myself, Khumalo. Unfortunately, Innocent Apiwe did not claim that 500 Rand, so we're having a rollover. So tomorrow evening, it's going to be 1,000 Rands that is in the money bag. Well, it's my time to sign off. Mbalini is going to be bringing you the Farming Podcast at 8 p.m. I'll be back on your screens tomorrow at 7 p.m. Until then, hope you're staying home and staying safe.